Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is the final day of the trading session. It's Friday and we did see yesterday that benchmarks had hit all-time highs. But the second half of the session did see some profit booking but eventually, overall, we did close in the green. But it's starting off today, the trends in the GIFT Nifty, that is pointing out to a mild start for our own markets, given that we did see that the US markets have remained closed on account of Thanksgiving holiday. So thin volumes are expected in today's trading session. Similarly, Asia Pacific markets, they have been mixed this morning and there has been some profit booking visible here as well, given that the global markets are in a holiday mood as of now. But yes, an important cue that came in, that was from your crude oil prices that settled mildly up, given that Russian President Vladimir Putin has broke his silence on the US-backed peace plan to end the war in Ukraine. Now, what he's saying is that Moscow is ready for a serious discussion about the draft proposals, and he has said that the peace plan, which is reached by the US and Ukraine, could be the basis of a deal that ends the almost 4-year-long conflict. Now, this is the first time that Putin has addressed a peace plan since a flurry of diplomacy, which was seen between US and Ukraine in the last few days as well. So, this is something that we'll be watching out for today also, and of course over the weekend as well, if there is indeed an update on this particular Ukraine and Russia peace deal, whether or not we reach out that as well. But yes, coming back to our own markets, we have our own second quarter GDP print, which will be coming in today. That will further set the tone of how the rate cut shapes up when the RBI meets next week. So yes, we'll be watching out for the second quarter GDP print after the first quarter was quite spectacular for the Indian economy. But yes, we'll be discussing all of this and more with our experts, which is lined up in our show. We'll also be taking your stock-related queries, so keep posting them on our live feed and we'll take them up shortly as well. But before that, let's take a quick look at the top headlines, Sasa. Asian markets have opened mixed on the final trading day of the week with no cues from Wall Street. Japan's inflation comes in hotter than expected and the GIFT Nifty trends is indicating a mildly positive start for our own markets. Crude oil prices rise as market participants weigh the talks to end the war while trading volumes remain thin due to Thanksgiving holiday. Gold, on the other hand, slips from its highest level in 2 weeks. The second quarter GDP numbers are due later this evening and may turn out to be eye-popping just as the first quarter numbers were. CNBC TV 18 polls sees the number at 7.4% compared to 7.8% in the first quarter. Economists have now raised their full-year GDP forecast to above 7%. Gail shares will be in focus as the Secretary for Petroleum and Natural Gas sector, PNGRB, has rolled out the long-awaited tariff revision order. The new transmission tariff levy will be 65.7 rupees for per million metric British thermal unit, which is lower than the 78 per MMBTU that the company had sought. And Russian President Putin says Moscow is ready for serious talks following the US-backed peace plan. This is the first time he has publicly addressed the peace plan. All right, yesterday we did see the markets hit a fresh record high of about a 26,300 mark as well. From the tariff lows, we've already seen that the index has rebounded about 19%. Sensex also crossed the 86,000 mark yesterday, given that it touched the new peaks. But in the later half of the session, we saw both the headline indices consolidate despite a strong breakout. But yes, sectorally, what led the markets, that was your media, financial services and private banks also outperformed in yesterday's markets. And what dragged was your oil and gas and realty stocks and consumer durables also, which were some of the top laggards as well. But yes, not much participation came in from the broader end of the markets because midcaps ended flat while small caps did underperform the overall upbeat sentiment. But yes, in the next couple of sessions, we're expected to see some muted global cues, given that the US Thanksgiving holiday and later also we'll be having the Christmas holiday as well. So thin volumes are expected to continue for the trading markets as well. But yes, on the macro front for India, we'll be watching out for the second quarter GDP print today. Economists have been seeing about 7.3 to 7.5% growth as well. In the first quarter of the GDP print, it stood out at 7.8%, which was quite eye-popping given that it was a 5-quarter high. But Q2 is not going to be on the similar levels, but still it's expected to hold above that 7% mark as of now. But yes, this is an all-important data and it will be released later in the evening and we'll be watching out next week how the markets react to it as well. But coming to the cash flows positions of where we stand, FIs they stood as net sellers, so sold stocks which is worth about nearly 2,000 crore rupees in the cash markets. Now this comes after a heavy buying that we saw earlier in the day as well. DIIs they stood as net buyers, bought stocks which was worth about 3,500 crore rupees in the cash markets as well. Put call ratio falling to about 1.16 from 1.45 levels in the previous session, and none of the stocks have been added or retained in the F&O ban list as of now. But yes, let's take a quick check of the pre-open rates of where we stand as of now. If you look at Sensex is up by about 71 points. Nifty is also holding above that 26,200 mark in the pre-open session. But with that, let's quickly get on board with our technical expert of the show. Joining me is Raja Venkatraman, co-founder, NeoTrader and trading influencer, to understand, how the market setup looks like for the time being. Raja, good morning. I mean, yesterday we did hit record highs, but eased during the later half of the session. So what's the sentiment looking now, and what are the levels that we need to watch out for?
Yeah, good morning, Lovisha. Thank you for inviting me to the show. As always, the markets have surprised us, and last week we were just speaking about the possibility of a revival. And yes, possibility it definitely was, and it came on a very strong footing of the tailwind was short covering and some genuine buying. But then, yes, we crossed the recent highs around 26,100, but and also flashed a new high yesterday. But what continues to remain is the sector rotation that continues to disturb the overall bullish sentiment which is on the floor. So what we are seeing is that a steady uptrend and a very bullish moves, or the continuation of the bullish moves in the indices, but that is not reflected on the stocks. So stocks are going through a sector rotation phase. So on an intraday basis, we got to be a little careful, and we got to keep booking profits as we go along, because that's the trend which is emerging in the markets right now. And even as we speak, the markets have actually tested the last high, right? And after that, it is actually now waiting for comfortably closing above it. So yes, I would wait for a comfortable close about 26,500, which will then say that we have left the past behind. But then we can see that yes, the markets have slowly, steadily, and laboriously they have edged to the top. Nifty, I'm talking about, but Bank Nifty continues to hold its way, and private banks, which were laggards, have now come into the fore, and now they should take over the lead up which was given by the PSU banks. I feel the PSU banks could take some rest, and private banks could come into action, the likes of Axis Bank, AU Bank, Federal Bank. These are some of the big names that have been steadily doing well. And now, I should say that instead of HDFC Bank and ICICI Bank, the big weights in Bank Nifty, the Bank Nifty has actually been propelled by the PSU banks and the other set of asset classes like real estate or the NBFCs. Those are the ones that are doing well. So now, if HDFC Bank and ICICI Bank also joins the party, Nifty's Bank Nifty is already about 60,000. So next week, after a strong run seen this week, I see that the next week could enter into some consolidation mode. The bias remains on the bullish side, and based on the option data, I see that 26,000 is going to be a very key level to watch out for. So that continues to remain a support. If you intend to be a index trader, then look at dips to buy into, because the dips level based on the supports and the kind of option data that is presenting out there, we can look at 26,000 as an important support to buy into. So yes, buy at currents and buy on dips. That should be the approach. Going forward, the target looks to be around 26,600 in the coming week. But then, based on the geopolitical news flows and the kind of holiday mood which is there in the global markets, see, because right now the domestic triggers have reduced considerably after the Q2 season. Now we are dependent on the macros. So macros, which is coming in the next week, is the RBI policy. All right, already the run up. Even the last time there was a run up before the RBI policy and post the RBI policy, actually the market corrected. So now also we could face some bit of correction here post the RBI policy. So that is a dip to buy into. So I would be a keen. I would be tracking the indices, track the RBI policy, wait for the dip, and enter at those levels. So the dip level in Nifty is 26,000. The dip level in Bank Nifty is 59,500.
Okay, all right. But says some consolidation could be warranted over the next week. That is what you're watching out for. But yes, Raja, what about the IT sector? I mean, it has done well, and now we have some growing Fed rate cut bets as well. You were talking about RBI policy, but also we have the Fed rate policy meeting, which is there next week as well. So, from an index level, how does the IT index look like to you, and anything that you're finding attractive at the current levels?
Yeah, the IT index continues to wax and wane, and yes, it is showing a bit of revival. Yeah, especially after the recent, correction which you saw in the domestic, sorry, in the international markets, where the big names in IT had a sharp decline. What I would say is that the IT continues to be mixed, and I would say that there are certain stocks that have been able to hold on well, and from them I would continue to place my bets on Coforge, Persistent, and Emphasis.
Okay, Coforge, persistent emphasis. But anything that you're liking in the markets, anything that you want to point out as your top picks right now, given that we've already hit the record high, but some consolidation could be warranted, like you were talking about earlier. So, what are your
Yeah.
top
So
picks?
one of the stock which I would like to recommend is Loris Lab, because Loris Labs has been on a strong up move, and any small pullback in this counter is being bought into. So which clearly says that this stock is headed for more upward traction. So that is one stock which I would keenly track. And the other stock which I would actively track is Cummins. Cummins, after some phase of consolidation, is showing some strong upward traction here. So I would say that you could see a nice run in Cummins in the coming weeks. So these are the two stocks which I would be tracking, because these stocks have been performing quite well. They've been able to withstand the market gyrations, and I would say that in the coming weeks, these stocks could move higher, considering that the market is also intending to move up.
Okay, Loris Labs and Cummins, those are the two stocks that we need to watch out for. But yes, let's talk about the stock of the day today, Raja, because that is your Gail. Given that we had the long-awaited transmission tariff revision orders, which was issued by the PNGRB late last evening as well, and now the new tariffs. That's the new transmission tariff levy, which will be around at about 65 rupees per million metric British thermal unit as well. But yes, let's we'll get back to the Gail, but it's the first rates that's coming on your screen. Nifty has opened flat with a negative bias as of now. It's still holding above that 26,200 mark. If you look at Sensex also, Sensex is open, quite flattish in the trade, very mild start to the markets, given that I was talking earlier about that the volumes are expected to be thin. So yes, it's a very flattish start to the markets. It's been testing that 26,200 odd levels as of now. If you look at the Nifty mid-cap index has also opened quite flat in the trade, 79 points downtick coming in for the mid-cap index. Nifty Bank also has opened quite flat in the trade, flat with a negative bias as of now. So yes, all in all, it's a very quiet start for the market, so to speak. And if you look at the advance decline ratio, you can definitely see that the advances are still looking at the upper hand. So yes, the market breadth continues to remain quite positive as of now. But yes, slowly and steadily, we are seeing that more shares are declining than advancing as of now. So yes, if you look at the broader end of the markets, both of the small cap and mid cap index has opened quite flat in the trade. Among the sectoral indices, if you look at Nifty Auto Index, quite mildly in the positive territory, but still, it's quite mild as of now. Nifty FMCG started flat with a positive bias. If you look at Nifty Metal Index, once again flat with a positive bias. Pharma index has also been quite sideways, 0.1% gains. On the other hand, yesterday private banks were holding up well. Today it's seeing a bit of a profit booking, 0.2% decline coming in for there as well. If you look at the Nifty Realty basket, open flat but with a positive bias. So yes, it's quite a quiet start for the markets in today's trading session, given that, yesterday we did see both the benchmarks hit a record high. So some consolidation could be starting today itself. So yes, let's take a quick look at the top gainers on the Nifty 50 then. We have Titan doing well, 0.3% gains coming in for the counter. Hindalco also holding up well with about 0.3% gains. SBI doing well. Reliance Industries once again holding up well. SBI Life Insurance also one of the top Nifty gainers. If you look at on the screen, Tata Motors passenger vehicle has also been doing well in today's trading session. Bharat Electronics, ONGC, some of the other top gainers on the Nifty 50. However, on the way down, Asian Paints continues to see profit booking, 0.5% cut coming in for there. Max Healthcare showcasing a loss of about 0.5%. Axis Bank, Kotak Mahindra Bank, and Tata Consumer Products also not doing well in today's trading session. So yes, all in all, it's a very quiet start for the market, so to speak, and you can see that the market breadth still remains on the decline mode. But yes, let's come back to the stock of the day. That is your Gail. Given that it is seeing a decline of about 5%, given that the revised new tariff transmission levy is quite less than what they were seeking right now, but though it implies a 12% increase in tariffs from the current levels, but it is the revision in tariff is definitely lower than the company was seeking for. And that's why you can see that the brokerage firm UBS have said that the tariff hike has been quite disappointing and that the increase in the realized tariff could even be lower. Despite the 12% hike in the announced tariff, it does not mean an equal increase in the realized tariffs. That's what the UBS note has been saying. And you can see the stock has been down by about 5% itself. Raja, coming to you, Gail, of course, a news development stock, and that's why we can see that the negative news price has been priced in the counter, 5% downtick coming in there. What would you advise to the traders as of now for Gail?
Yeah, when you take a look at the structure of Gale and the kind of news flow, definitely it seems encouraging, but it has not been responded to by the price action. And when you see over the last few weeks, we can see that the stock has not been able to conjure up enough momentum here. So at this juncture, anyone holding Gale as an investment bet should definitely exit. And if you are on the trading side, then it actually presents to you a shorting opportunity. And this shorting opportunity could extend through the month. So it's a good shorting candidate for the December series. And I would say that if it were to break the recent lows, then it could be a possibility of more downside. So the downside closer to the region of around 148 is possible. So one can look to trade this on the downside, but then I would not advocate it as an investment bet.
Okay, all right. Not as an investment bet for Gail as of now. Let's take another stock in focus, that is your Tata Elxsi. Well, the stock is flat with a positive bias, but we did see yesterday that they had announced a strategic partnership with island-based Druid Software to strengthen its enterprise 5G offerings through integrated private network solutions. Raja, how are you placed on this counter? Today the stock is quite flat, but the stock has been spiraling downwards.
Yeah, the results when the results declared by Tata Elxsi over the last two quarters has not been very appealing, and that has impacted the overall movement of the stock as well. And the stock continues to be on a downward trajectory, and with no real sign of any tailwind also emerging from the corporate action. The combined effect is witnessing being witnessed on the chart action, and we can see that not only the last two quarters, the price has been on a descent almost more than a year now. So I would say that one should consider that this it's definitely a call for exit and not a time for investment yet. So more on the trading side, similar to Gale.
Okay, more on the similar side for Gail, Tata Elxsi. All right, let's take some of the viewer queries that is dropping on our live feed. We have Kalikya Badi who's been asking the view on GMR Airports. GMR Airports, how does it look like for you, Raja? I mean, the stock has been doing quite well in the past 1 month itself, and it's mounted above that 100 mark as well.
Right. Amongst the this real estate names, this particular stock has been consolidating and moving quite steadily. And ever since GMR Airports got renamed, and this kind of move which we are seeing, the pullback which we witnessed somewhere in the closer to the region of March. Since then, it has been steadily making higher lows on the higher time frame, and now it's on to a new high. So overall, this stock presents a good opportunity for investment, and of course it's also a good bet for trading. So I would say that it's a good stock, and one should continue to have patience. So this stock definitely demands some patience, and it has got a lot of prospects to move much higher. So higher targets can be closer towards the region of around say 130 to 135 within the next 1 year.
Okay, all right. Let's take another viewer query then. We have Nana Prakasham who's asking the view on Ashok Leyland for the next 6 months. Raja, what's your view on the counter? I mean, the stock has seen quite a good uptrend so far this year itself. And in the past 1 month also, the stock has done quite well. 12% gains came in for the counter. So what's your expectation for Ashok Leyland? Can the gains hold or sustain and can extend?
Yeah, Ashok Leyland has got a diversified portfolio, and when you take a look at how it has been able to perform, and actually it has been underrated stock, but it has delivered quite a promising return if you see the entire year. So it's moved from closer from 100 to all the way till 158, which is a phenomenal run, and there is no stopping also at the of the momentum right now. So the momentum continues to build, but entering at this juncture would not be a right approach. I would say closer to the region of around 142 to 145. There are nice set of supports emerging there, and also a good pullback in this stock would be an ideal opportunity to enter the stock. Overall, it's a good investment and trading bet, and upward possibility towards the region of around 200 target zone is possible in the next 1 year.
Okay, all right. That's the view coming in for a show, Cleland. Today, however, the stock has been down with about a percent decline as of now. But yes, on that note, let's quickly move on to our next viewer query. We have Harsha, who's been asking the view on Dixon Technologies for the long term. Raja, what's your view on the counter for Dixon? Of course, we did see some good momentum for September, but since then, once again, the stock has fizzled out gains. It's down by about 20% from those levels.
Yeah, this stock has not been able to, generate the kind of euphoria which it was associated with the iPhone. And what has happened right now is it has formed on a higher time frame, almost like a double top, which is not a good sign. It is not the double top implementation has not happened, but then it is definitely not a good signs that are emerging in Dixon. So those who are looking to have higher prospects or have higher expectation from Dixon should definitely be wary, because at the current juncture it has tread into some strong set of supports, no doubt. But then I would say that closer towards around 13,500 would be an important level to watch out for. Beneath that, then the matter could worsen. So right now also the trends are not looking as encouraging despite the markets coming up, and this being one of the strong movers, it's going through a rough patch right now.
Okay, okay, all right. A rough patch for Dixon Technologies likely to extend as of now. But yes, let's move on to our next viewer query. We have Anand Roop, who's been asking the view on PVR Inox on how the counter particularly looks like. Of course, in the past 1 month, we've seen that the stock has been in a downward trajectory, and even the strong build-up of 1200 levels it couldn't sustain in the month of October as well. Raja, what's your view on the counter from 1200 to 1064? The journey has not been quite encouraging for PVR and Inox.
Yeah, the charts are definitely not like the movie theaters which we visit. The movie theaters which we visit are quite glittery and shining, and you get a sense of fun. But holding on to this stock is not going to be a pleasant moment. It's destined for more downside based on the setup and the overall positioning and the kind of movement which we are seeing, very sluggish movement. So it's not a stock to invest in. There are other set of sectors that are in play. So one should look at that. There are strong IT names that are coming up, and after a very very long time, IT sector is picking up. So look at IT, look at private banks, and those are some sectors which I would watch out for in the December series.
Okay, all right. Let's move on to our next cube query. That's your by Satya. He's been asking that out of PFC, NTPC, and Coal India, which could be sold being a long-term investment, and where could one enter for the medium term? Any thoughts on these particular three counters, Raja? PFC, NTPC, and Coal India?
So, see, when you talk about NTPC, when you talk about PFC, I would say that all of them, and even Coal India. So, amongst them, Coal India keeps on coming out with certain news flow, certain triggers. And I would say that if you want to exit, then PFC and NTPC, they are showing signs of wearing out, and all three of them are under pressure. But I would say that the least is Coal India.
Okay, all right. The least is Coal India for now. All right, let's move on to another viewer query. We have PKB Sai, who has been asking the view on NCC because he's been holding the stock at about 205 rupees, and he's asking whether it's a good idea to average or should he exit at this point of time. 205 is his holding price. Right now, the stock is trading at about 170 odd levels, Raja. And in the past 1 month, also the stock has exhibited quite a negative trend, seen a sharp slide. What would you suggest him to do?
Yeah, this stock has not been able to encash the continuous corporate actions that are emerging, and the decline which we are seeing right now is continuing to persist. So it clearly spells out for an exit. But yes, from the current investment price of 205, it is definitely much lower. So one could exit some at the current juncture, wait for a rally, and even at rally around close to around 205 to 210, you will experience some supply, because there's a strong resistance zones that are emerging there. So maybe you can exit on a rally, because stock is not showing any signs of recovery yet. No, I would not call for any addition or infusion of further capital at this juncture.
Okay, okay, all right. No further infusion of capital in NCC then. Let's take another viewer query then. We have Shweta Naidu who has been asking the view on Keynes technology and can it be bought at the current levels? Of course, the stock has been quite an underperformer so far this year, Raja. But then yesterday we did see a positive brokerage note by Nomura where they have initiated a buy call on the counter and they're seeing a potential upside going ahead as well. But what's your view for Keynes technology for the near term at least?
Yeah, the semiconductor space is definitely buzzing, but compared to Keynes, I would say that any correction in NetWeb has a better opportunity for us to initiate some reaction. Yes, the correction in Nvidia has also impacted this particular counters. So I would say that one should be wary. One should see if some trends are picking up, because they are interconnected. So we should see that and then go in. At the current juncture, the stock is under some pain, and move below 5200 would definitely call for more decline here. So it's at a very tricky point right now.
Okay, all right. A move below 5200 could see some decline for Keynes Technologies. This is something that we'll watch out for. Let's move on to another viewer query. Then we have Komal Makhija who's been asking the view on the fresh entry for Sun Pharma for the next 6 months time horizon. Raja, any thoughts on this particular counter? We've seen a good uptake in the past 1 month for Sun Pharma.
Yeah, so very good question and a good stock as well, because it's been on a declining phase for almost 3 to 4 months. And what we are seeing right now is that post this consolidation, the stock is getting out of its shadow. And I would say that one should be buying it now, because the stock is coming out of its shadow. Instead of buying it at much higher level, this could be a good point of entry. So you can parcel your approach, wait for levels of around 1900 to cross and add more there, because yes, the stock is showing some promise of some upside in the coming days.
Okay, some promise of an upside in the coming days for Sun Pharma then. We'll watch out for this counter. Let's take another viewer query. We have Naveen who's been asking the view on Canara Bank for a positional trading. Any thoughts on this particular counter, Raja? I mean, the company does plan about a 3,500 crore rupees of a bond sale, and so far this year also the stock has done quite well.
Yeah, so Canara Bank, if those who have been appearing regularly on Friday when we meet, this counter has been strongly advocated by me, and you can see that over the last few months, whenever I have a take on PSU, I always say SBI, Can Bank, and BOB, and I put Can Bank as the number one. Now Indian Bank also joins the list. Currently, Indian Bank is at some resistance zone, so buy it on some reaction. And now Can Bank has seen a very sharp up move. So now, over the last few weeks, it has gone up by almost from 100 to 150. So at this juncture, entering into CanBank is not the best suitable approach. So I would say a reaction into the 135 zone, where there are good set of supports. I would say that one should consider CanBank, not at the current juncture, because a reaction, it has stretched its momentum, and on a reaction, one should consider CanBank.
Okay, all right. Stretched at the current levels, but not a buy, good buy as of now in the current levels for Canara Bank. All right, let's take another viewer query then. We have Leo Ryder who's been asking the view on Waaree Energies for the next 2 years time horizon. That's a long time horizon, but for the near term, Raja, what's your view on the counter for Waaree Energies? Today the stock is down by about 1%, but year to date performance showcases 11% uptake, but the stock has entered a consolidation zone.
Yeah, see, the EV space and the energy utility space continues to be mixed, and well, they move on certain tailwinds, just like the railway theme. So right now, the stock is undergoing some consolidation here, and stocks like Waaree Energy, they demand patience. So I would say that if you are willing to hold on, if you are willing to be patient, then nothing is disturbed. The uptrend is intact, and But if you want to add into this counter, I would say a move above 3250 would be a better zone for addition, where it would again signal that yes, a fresh wave of momentum has occurred, but not at the current juncture.
Okay, okay. Now that the current juncture for Vari Energies, then let's take another viewer query. We have Aisha who's been asking the view on some real estate stocks such as Prestige Estates and Godrej Properties. Of course, both of the stocks have been quite range bound in the past couple of sessions. But yes, Raja, what's your view on the counter and of course the entire realty basket as well?
Yeah, the entire realty basket is actually waiting for the RBI policy, because the last post the repo rate cut, the reflection of the liquidity has not been really seen in the system. So everyone is still awaiting, and now this rate cut may infuse a further round of enthusiasm. But then the real estate has been quite docile, and they have not been able to really take the cues from Bank Nifty as well. So I would say that the Godrej property, or Prestige Estate or DLF. So there are a lot of good names here, but all of them are in a current consolidation phase. So that's what I've been saying, that the sector rotation is the theme of the last 1.5 years. And if you have to actually make money from this market, then you should get into a sector and then book your profits and come out. One cannot hold on to any stock for a long time in case you don't have the patience and you don't have the capital. If you got the patience and the capital, then yes, this is a good time to enter real estate.
Okay, all right. Patience and capital warranted. And of course, the RBI policy meeting, which is there next week, is going to further shape the action on the real estate counters as well. With that, let's move on to our next viewer query. We have Barun Kumar, who's asking the view on Shriram Finance and how the counter looks like. I mean, it's seen quite a bit of a smart rally in the past 2 months itself, Raja. I mean, 40% gains that came in for Shriram Finance. So, would you advise traders to book profits at the current levels, or the gains are going to sustain going ahead?
Yeah, so yes, the stock is definitely in a strong bullish run. But then, when such queries are being raised, one should also consider that if you're going to enter a stock at such high levels, you should also factor in some bit of reaction here, because it is part of the whole game. Now, a reaction in Shriram Finance is very much possible, because if you see in the last 3 months, the stock has moved from closer towards around 650 to all the way towards 850. So a 200-point move, which is quite a significant move. So any reaction towards the region of around 750 to 775 would be a good zone to buy into. So if you are able to parcel your approach that way, then it's a better way to enter into Shriram Finance. Yes, it is on a very strong wicket, and I would say that the momentum is set for more upside, but then it will go through its set of reactions.
Okay, all right. Shriram Finance, that's the view coming on the counter. Let's take another viewer query. We have Solomon, who's been asking the view on Lupin, and he's asking whether he should hold it for the long term horizon. Raja, any thoughts on this counter? I mean, you were quite bullish on Sun Pharma, but for Lupin, the stock has been pretty range bound in the lower trajectory.
Yeah, so I would say that Lupin also falls in a similar scenario. It has been consolidating at a support level. So again, the entire market, barring Nifty, Bank Nifty, the other sectors have not really come out of its shadow of the last 1 year. And I would say that now, with the markets holding on the higher levels, probably all these sectors will start revving up. And in these sectors, my suggestion would be deep dive into the stocks that I have managed to hold on rather than correct sharply, and invest into them. So I would say that when I'm talking about that, then Lupin is definitely one stock which has been consolidating at higher levels, and now we can see some upward traction here. So Sun Pharma has taken the lead. Now, likes of Lupin and Glenmark could also follow.
Okay, all right. All right, that's the view coming in for the pharma stocks. We have another viewer query. That is your Kan Manthan, who's been asking the view on Tata Steel on on how this particular counter looks like. Of course, the stock has seen quite a bit of a good uptrend this year itself. But yes, going ahead, Raja, what's your view on Tata Steel? I mean, the entire metal basket has seen quite a good uptrend.
See, we saw a strong up move based on the geopolitical news flow in the metal names. But then what has now happened is that after hitting its last high, the stock has slipped into a profit booking mode. So this profit booking at higher levels, profit booking near the previous highs, that's part of the market movement. So one should ensure that you are able to withstand this gyration. And currently, Tata Steel at an important support. And I would wait for some bit of consolidation at this current juncture before getting into Tata Steel. But then I would say the likes of, say, Jindal Steel, Hindustan Zinc, Hindustan Copper, these are some names that are doing much better in the metal pack.
Hmm. Okay, all right. That's the view for the metal pack. Let's take another view query. We have Contact who's been asking the view on solar industries on how this particular counter looks like. Of course, the stock has seen quite a sharp fall this year itself, and since then the stock has been quite range bound. Any views and thoughts on the counter, Raja, for solar industries?
I think that the stock continues to remain in a sideways mode. So I would say that I would prefer to stay away from this counter.
Okay, all right, all right. All right, with that, we have to let you go, and this is the end of the query segment, Raja. So, with that, we have to let you go, but thank you so much for joining and connecting with us.
Thank you. Good day.
All right, let's take a quick check of the markets or where we stand as of now. Of course, we did start quite mildly flat in the trade, and right now also the Sensex has been showcasing just a mild gain of about 12 points. Nifty is also slipped, below that 26 250 mark, and it's still holding above that 26 200 mark as of now. So yes, 4 points downtick coming in for the Nifty as of now, flat with a negative bias. Some of the sectoral indices that has been contributing to the losses, that includes the likes of your Bank Nifty index showcasing a decline, flat to a negative bias as of now. IT index is also down with about 0.3%. If you look at the broader end of the markets, midcap and small cap index also has been showcasing a decline as of now. So not much participation once again coming in from the broader end of the markets, and that's what's weighing down for the markets to make a further up move as of now. But yes, before I move on to our next guest of the show, let me introduce you to Money Control Super Pro, which can be your ultimate investment superpower. You can get your live trading calls, investment ideas from SEBI-registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So download the Money Control app and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have Vijay Sarda, CIO, Equities at Systematix Asset and Wealth, joining us. Vijay, good morning. I mean, yesterday we did see market reaching at an all-time high, but it has fizzled out gains. Today it has been quite flattish. So what do you believe the next triggers would be to drive the markets ahead? Vijay, your audio is mute, I think.
Yeah, hi, good morning, Lovisha. So taking off from what you asked, market, what we have seen in last 12 months, we have hardly seen 5-6% return. And if you look at from last 14 months, we just now yesterday crossed new high. So we have been languishing or consolidating in this band for almost 14 months before taking out the new high. So on the backdrop, what we have seen in the past is two, three things. One is your earning growth has slightly disappointed, which has led to the underperformance. And secondly, the basically the global market, other global market look attractive compared to the Indian market. So the allocation of FI has tilted toward that. But now with this 14 months consolidation and our earning trajectory catching up, we see good move ahead from here on. Earning now bottoming out, and from here on, we may see upward trajectory in earning. Our expectation is around 10% earning growth for the current year, and next year we can see 14 to 16% earning growth. So from here on, I think the market which has taken a backseat and been consolidating from here on will start moving up. In terms of sectoral thesis, we see consumption driving the market move from here on, which was backseated for years. Majorly function of three, four things. One is quite important government focus on consumption, which is driven by the last budgetary allocation. Basically, if you look at government has reduced income tax, which has led to some bit of more money at the wallet of the investors. On top of it, the recent GST cut, which government has done, has also led to more money at the pocket. And on top of it, the 8 pay commission, which is going to get implemented from January onward, that will also see some bit of more money coming to the consumer wallet. So we see discretionary spending to move up, staples, auto, and the sector like discretionary. If you dissect sectors in discretionary like jewelry or maybe spending on fashion, or basically that will start picking up from here on. So we see sector linked to consumption to take front seat from here on. Capex oriented sector will grow, but not as fast as that they have seen over a period of time. Apart from that, we see sunrise sector like data center, or basically data center. Then EMS, the momentum has been quite good. It will maintain that momentum. Then we see good momentum getting built up on top of the existing on the defense side. And there are a few smaller sector, like as I highlighted, jewelry is one of them. Then you talk about hotels, hospitals. So wherever your consumption pie is there, I think people will start putting more money to that basket.
Okay. Vijay, you mentioned that the next year is something that we can eye out for 14 to 16% of earnings growth. But when we started FY26, we were hoping that there would be double-digit growth, but the past 2 quarters has been quite disappointing. So do you believe that the third and fourth quarter would be enough to drive us to double-digit growth, or what are you watching out for? How
So
the
I said I said this year we may see 10% kind of growth, 9 to 10% growth. Next year, that is FY27, we see 14 to 16% growth. So first 2 quarter were down predominantly on account of extended monsoon, which we have seen. And on top of that, the GST implementation, that is a GST cut that has been announced, has spoiled the last month on the of the second quarter. So going forward with the GST benefit getting passed on to the consumer, we may see that getting better for the Q3, as what we are seeing from coming from the auto number as well as the consumption pattern. We may see good Q3 on those sector. And what has led to the demand destruction or to some bit of disappointment on account of tariff, we see that will get realigned in next 1 or 2 months. So going by the government commentary on the tariffs, US tariff and all that, we see if some revival happen there. I think the sector, the export sectors which got impacted on account of the same, should be able to turn back. So that's our thesis on the same.
Okay, all right. Vijay, you were saying that you're quite bullish on the consumption sector going ahead. We did see some disruption when it comes to GST in the staples. QSR also saw a soft quarter. So any particular subsegments that you're watching out for in the second half of the fiscal year?
Yeah, so precisely, staples is one which will continue to have say low, high, mid single digit growth. The sector that we bullish on is auto. Again, auto, we have seen good rally in the passenger car segment as well as two-wheeler segment. So eventually, what we are seeing in two-wheeler segment also, we see good amount of positivity coming in EV space. So currently, EV space is around 8% of the two-wheelers market share. So we see over next 5 to 7 years that getting to 40 to 50% of the incremental volumes. So the EV space, which we like, and the component in and around that universe should get benefited. On top of that, passenger car we are bullish on, and that will be remain in limelight for some more time. On the other sector, what we have seen in gems and jewelry, the jewelry sector has seen good growth primarily on back of two things. One is the gold price moving up. However, the consumption wallet also is improving. So the demand there has been function. If you look at from the volume side, the sector has done good volume growth in last 3-4 years, and we see no reason of it not doing better going forward as well. Uh, so that is on the other side of discretionary spend. And we see again high-end discretionary spend things to do good. However, we do have a very limited market participation in the high-end discretionary in the space which are listed. But what we see over a period of time, the new stock like what recent listing on the electronic side, we will have a better basket to talk about. So that will be a sector to watch out in going forward.
Okay, okay, all right. Let me also talk about the auto and auto component manufacturers. I mean, we did see that the Beijing had halted the rare earth exports, but now we have the government's incentive package. So, do you believe that it'll just get better? And, since you said that you're already bullish on the auto sector, it's just going to be, a picture perfect moment for the entire auto sector.
Auto ancillary as such, basically, if we look at Indian markets, auto ancillary stocks were doing very good on the Indian basket side. But when it came to export, it got impacted a bit on account of last year disruption in the global market, primarily in the Europe, and secondly with the tariff thing in US. Now with Europe starting to get better, and US, if we get away from this tariff thing, we may see some good growth coming there as well. And space has already caught up to a great extent in line with the auto stocks, but few stocks which are more levered to the global growth are still looking good, and there we can see good traction coming up in the future.
Okay, okay. Vijay, what about the IT sector? I mean, there's a plenty of buying traction which we are seeing in the sector, and some sequential improvement and also in the Q2. But and now everyone is talking about the anti-AI trade also. So, are things aligning for the IT sector given that they have been stark underperformers this year?
Yeah, we are turning constructive on IT sector at this point of time. What we have seen primarily the negativity coming on back of the delayed decision making from the US discretionary spend side. If you look at the last 3-4 quarter, the good amount of order accumulation has happened in the sector from the big guys. If you look at their order book, and they have gone up quite substantially. But in terms of execution, since there has been delay decision making from the global guys, and because of the tariff related issue, or because of the issue at the US level, the discretionary side of spend has taken a backseat. However, what we see going forward, once we see the next year coming in, I think with the US now getting to a trajectory, or basically a traction in terms of the rate cut already happened now. They are aligning again back to the tariff measure that they initially sought. They have renegotiated the tariff further. We see US economy also slightly getting better, and this decision making delay that has taken shape should start moving, so which should be constructive for the sector. We have already seen a good amount of consolidation in the sector, so because of which the cost alignment has happened. So last 3-4 years, if you look at sector has seen a remarkable growth, and the growth was been substantiated, or basically was also causing some bit of inflationary pressure on the salaries and wages. Now with this softness, I think the salary pressures are behind. The companies have aligned their cost structure. So I think once we start seeing some bit of growth trajectory, these benefits should start accruing to the company. So if you look at last quarter number, margins have slightly inched up compared to last quarter, and the utilization as well as utilization level has also taken shape positively. So except for the last quarter news on the basically H1B visa cost increasing, we have not seen a major dent in the sector, basically macro. And so when we see US getting better next year and Europe any which way reviving, we should see good traction in the sector coming forward. And currently the sector is trading at the PE band, or basically on the average PE band only. So from here on, we can see at least market better than market growth in the sector.
Okay, all right. That's interesting. Vijay, what about OMCs? I mean, they led the second quarter performance. Do you expect this growth to sustain in the upcoming quarters, given that their retail margins have something that has fallen in the September quarter?
OMC, I think we should not be able to track that actually as basically what they don't have the pricing pressure to against them. What we do talk about, they don't basically calibrate the price depending on the prices. So recent last 1 2 month, there has been good amount of fall in crude oil prices, which has led to the retail margins going down. However, we see this is a short-term phenomena, and crude again will catch up to 65-70. So if we average that, I think the retail margin should get better. So even if you look at most of the analysts on the street, they have not built in a big amount of retail margin in their numbers. So even with what kind of margin that they do currently, and refining GRMs getting better, we may see positivity coming on the GRM margin side, what we have seen in the last quarter, which will negate some bit of negativity in the retail margin. But as I said, this is a temporary dip what we've seen in the crude prices globally. If crude price again moves up slightly higher, we will be still able to see positivity in the retail margin going forward.
Okay, okay. And what about banks? I mean, you did mentions about, the banking performance crucial for the overall market performance as well. But from the private and the PSU bank basket, which one are you more favorable towards?
Currently, as I said, highlighted on the consumption side of story. We like basically banking in general as a whole, but I think private banks have seen good rally over last 1 2 year. So what we are seeing, PSUs are catching up, and we see PSU maintaining outperformance in the near term compared to private bank. And on the private bank, we prefer a lower, basically small private bank compared to the larger one, and where we see good amount of traction happening. So if you look at that space, is seeing good amount of traction on account of M&A, or basically global funds acquiring stake, like the recent deal that what we've seen, and the valuation in private small private bank were quite conducive, trading at 1 to 2 times. Given the growth, we see that valuation should inch up, and which will offer you better return compared to the large private bank. And PSU, what we see is a continuation of positivity on account of the good quality book that they have built, and basically the growth coming back to the consumption. So now PSU Bank, if you look at, they have become quite aggressive on the consumption side of the growth, like housing and retail and other personal side, and they should reap the benefit of the same going forward.
Okay, all right, all right. Nice chatting with you, Vijay. Then, thank you so much for your time, and we hope that we connect with you soon.
Thank you, Lovisha. Thank you very much.
All right. All right, let's take a quick check of the markets or where we stand as of now. If you look at Nifty Sensex, that is, extended some a bit of its gains. 100 points uptick coming in for Sensex as of now. 0.1% gains coming in for Sensex. Nifty is also holding strongly above that 26,250 mark as of now. So yes, we are slowly and steadily going into the positive territory. And if you look at the sectors that is contributing to the Nifty's gain, that includes the likes of your auto index showcasing a gain of about 0.4%. Metal index has been doing well with about 0.3% gains. And And on the other hand, if you look at the PSU banking pack, that has led the gains with about flat with a positive bias as of now. And Nifty Realty has also picked up some pace, 0.2% gains coming in for the Nifty Realty basket as well. On the other hand, broader end of the markets, once again sulking in the trade, they are underperforming the markets as of now. Both the broader end of the markets, Nifty midcap and small cap index, they have been showcasing a decline of 0.1% as of now. So, but yes, there's not much participation which is coming from the broader end of the markets. That is what is capping the upside going ahead as of now. But we'll watch out how the second half of the trading session pans out, since given it's the last trading day of this month as well. We'll be watching out, how the Nifty closes in today's trading session. But for so far this month, the Nifty is already up by about 1% itself, and we'll be watching out whether we close in the green in today's trading session as well. But with that, we have come to an end of this edition of Opening Bell. Do not forget to tune in at 3 o'clock for closing, and we'll discuss about what stocks were in focus, and we'll discuss about the market, how the texture of the market is developed with our experts as well. But yes, until then, signing off. Do stay tuned to moneycontrol.com.